if we close below, sell above. That is the whole philosophy around one candle theory. Traders reach out to me all the time and ask Loz, what is the easiest model and approach to one candle theory? And I am finally giving that to you today. Okay, I will repeat, if we close below, sell above. If we close above, buy below. It is that simple. Let's dive into exactly what I mean by this. So we are clearly in bearish order flow here. This is the EURUSD daily chart. Bearish order flow with a higher time frame low intact. This is our draw on liquidity because this is a fractal market maker sell model. We took out a previous month high and then broke lower. We are now diving for this low. So we have a higher time frame draw on liquidity. Every time now we close below a daily candle, we sell above the next one. So what do I mean by this? Take a look at this example here. This candle this candle here closes below this candle. Okay, so Wednesday closes below Tuesday. So where do we sell now? We sell above the low of Wednesday, right? So here we sell above this black line, and this is the easiest approach to one candle theory. Doing this consistently, if you have the higher time frame drawing liquidity, this will get you funded. Finally, this will get you funded and this will get you payouts because it is such a simple approach. If we close below the previous day low, the very next day we should be selling above the low of this candle here. Okay, so remember, we close below this low. Now, as soon as this day opens up, we want to be selling above this candle's low, ideally in the body. So drop time frame, and this is your candle low. So remember, this black line is the previous candle low. Any time we rally above here, we want to be selling. So now you may ask, where exactly do we sell? Technically, you can sell from this black line itself. I would advise a stop loss of about 30 pips. If you are on side with price, so if you have the direction correct, price should not really move more than 30 pips in the opposite direction. So those of you who want a simplified schematic approach, you would be 30 pip stop loss and then obviously aiming for whatever you want to aim for. However, those of you who are less mechanical and more dynamic in your approach to trading, I would tell you that look for a raid on some previous session liquidity, some previous kill zone liquidity. Why kill zone liquidity? Because kill zone liquidity is important. Certain highs and lows created at certain times are key. So we're not just looking at any highs and lows. Look at some key liquidity at a key time. So what is a key time here? You can see 2:30 a.m. But a previous session high. Previous session high is clearly here. So Wednesday's high before it eventually consolidated into close was this. Remember I said we are selling above the low of this candle. The previous candle low, we are selling above. This, remember, anything above this is a deep premium. We're selling above this. So when we raid a previous session high, okay, can you not enter here on this right here, on this turtle soup? I would put a stop loss of about 15 pips, okay, because you're entering at a key level. Remember, at a key time. What is this key time here? 8 a.m. 8 a.m. is the heart of New York. So you would obviously aim for whatever you want to aim for. You could aim for the lows down here. But the point is, all of this, okay, knowing where and when to sell was given to us by this daily candle closure. So this daily candle closure gave us an idea for this candle, okay? We can repeat the same thing on other pairs. And let me dive into that and give you some more examples of this. We clearly now have a USDCAD daily chart. Now, where is this reaching for? The obvious draw on liquidity is this high. because again, we're in a fractal market maker buy model this time. Price has been accumulating positions as we move higher, and now we dip down, okay, and now we are looking for this. So until we reach this high or this rejection block, we are bullish. We have higher time frame draw on liquidity, okay? Remember what I said. Once we close above, we are now buying below. Look at this right here, okay? We close above Tuesday, October the 8th. We close above with Wednesday's candle. Thursday opens, okay, trades lower. Any of this portion from here down to there, this 28.6 pip, remember I said key, under 30 pips. Notice that. So from here to here, anything below here is a deep discount because we are expanding, because price closed above this candle. We closed above the high of the previous day candle. The next day, we are buying below the high of, again, the previous day candle. Dive into a lower time frame and you will see the exact same concepts repeated over and over again. So, previous day high is here. Price closed above. You go into the next day expecting a Judas swing first and buying below this. This is Wednesday's high. Thursday opens up when? Okay. Midnight New York. Anything inside here from this point to this point is a buy. Okay. Anything here is a buy. So you could even drop time frame on a 5 minute, on the 1 minute. It doesn't matter. Anything is a buy because of the framework we just outlined. Because the last daily candle actually closed above the previous daily candle. Now, this black line, we are buying below it. This is the easiest approach to one candle theory. Now, I've been teaching you one candle theory for a while now, okay? I want you guys to grasp a mechanical approach to it. This is the easiest approach I have found and I've come up with to one candle theory. You only need to know what the previous two candles have done, okay? And that allows you to be on side with the market. If we even dive into another example here, look at this. So we're continuing with bullish order flow, and notice where it stops happening once we reject and close inside the previous candle. So you would then anticipate a pullback. You may have taken a loss here. Actually, you probably would have caught this because you would be buying from here all the way in this wick. But let's say for some reason you took a loss. That's fine. You took 3 wins here. Okay, so 1 loss should never cancel out 3-4 wins. Anyway, we just looked at this one back here. Now let's look at this one. Thursday closes above Wednesday's high, which sets us up for what? This sets us up for one candle theory to do its thing. This sets us up for this level, or even this level. We can, if you want to dive into specifics and you want to get more technical with one candle theory, we can begin to use the bodies. But for this, I will show the example with the bodies, but for the sake of making this strategy simple for new traders, I know a lot of you are quite new to these concepts. So I don't want to confuse you too much and I want you to grasp this. To make it easier, let's use, or you would actually use the wick here, but to show the example, nevertheless, let's use the body. So you would be buying below this body. Any dip below this body is a buy. Remember, because we closed above this right here, because we closed above this, this is allowed to happen. The manipulation comes in when? During the news. So now you can start to incorporate news events to work out when this will happen. So we have a big news event at 8:30 for the USD. Obviously, we're trading USDCAD. This is high impact for this. Look what happens here. Remember, this is the previous day body this time. You can use the high. Anything below here is technically a buy and you would still make money in the long run. But for the sake of this, we are using the body. I want to show you that it's possible to use the body. Look here. We dip below, take out, sell side liquidity at what time? 8:30. Previous days, 8:30 liquidity gets taken out and rallies into the close. Okay. you would be buying below here. This wick, after news, buys. Okay, buys are in play here because this daily candle closed above this one. So now you are buying below this black line. This is the introduction to one candle theory. Okay, this is the introduction to a mechanical approach to one candle theory, and I want to teach more on this. So if you did enjoy the video and you want me to teach more on this, meaning a part 2, 3, however many it takes for you guys to grasp this, okay, please comment candle theory or comment one candle theory. Okay, if I get enough one candle theory comments, I will bring a part 2, a part 3, however many is needed for you guys to grasp it, I will bring that. So comment one candle theory if you did enjoy the video and you want a part 2. With that being said, check out my mentorship in the description to learn these things deeper and trade with me every day. It's the top link in my description. Anyways, if you did enjoy the video, please drop a like and a comment to support me. Remember to comment one candle theory, subscribe if you're new, and turn on post notifications so you never miss a video. With that being said, I will leave you to study this. I hope you did find value in this video. Thank you as always for watching, and as always, I'll catch you guys in the next one.